Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. What an impressive rally from the Australian dollar as it now heads closer now to the 67 mark. The Australian dollar surged Monday on early Tuesday after rebounding near the 65, 55, 75 area where we can see here outlined has ignited the move, and from there we got a very strong candle on one building as the broad US dollar softens ahead of the Christmas holiday slowdown. Markets thin into midweek with the focus on the RBA minutes on Tuesday, which showed the board growing less confident that policy remains restrictive amid signs inflation may be more persistent. The Aussie stays underpinned, though, by expectations of multiple rate hikes into 2026, even as the Fed eases. With the US GDP now also on the docket on Tuesday, all eyes will be there. We've been expected to see a call to 3.2% in Q3. Looking ahead to 2026, there is much talk that we could see a rally that could progress onto 68 to 70 cents for the Australian dollar. But in the meantime, let's keep an eye on this top side around 67.0515 as we did meet good supply there, as we saw back in September and also in November, December. Nevertheless, this is a stronger play here, and a break above there would give scope up towards 68 cents. Any pullback views 66.25, and of course the base beneath at 65.5 to 65.75. The euro also playing a very firm play here as it now heads on and looks towards that top side target, which is around 118.2040. A rejection area, but I still feel there is scope on towards where we challenged around 118.60 in September. With the dollar weakening, along with that, we've got mixed messages from the Fed, and lingering CPI distortions has kept convictions muted, though the ECB comments signalled no near-term hikes but persistent inflation risks, leaving the focus on the upcoming European GDP and key US data. Though looking at the technicals, they are firming, so therefore let's see if this rally can continue. And turning to dollar yen, well, the market rejected from 158 and now pressuring this support area seen around 156. I am in view, though, that we could actually eventually see the downside play from this recent head and shoulder call and heading towards 154, or even down lower. Nevertheless, the rallies are failing, the bull traps keep coming, and let's see if the bearishness continues now to target around that 155.5, and a break there should give further scope to 154. Looking on to sterling, a very impressive play here as it breaks higher towards 134.5 to 135. And looking at the technicals, there is still room for a higher climb, even on to 136 as a potential target. With the trend and the rest of the indicators all bullish, limits any pullback. Of an impressive play when it comes to gold as it ignites rally, it posting a fresh high and heading closer now beyond its target of 4,400 to 4,500. Driving the demand is the self-haven flows driven by a rise in geopolitical tensions between the US and Venezuela. Along with that, there is also rising tensions from Iran's missile drills and the prospect for further Israel strikes on Tehran. That is very uncertain as we go into 2026, but safe haven demand is keeping this rally going for gold, and any pullback to be limited. Reassess around 4,500. And oil gapping and rallying higher, and now since clearing that level that I was looking at around 57.5, looks on to $61 a barrel, and reassess from there. Well, that's a wrap. Thank you all for joining me and ECN and myself, Rob Clayton. And also again, we'd like to wish everyone a Merry Christmas and a prosperous 2026. Thank you for all your support, and I look forward to speaking to you in January. Take care.